Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'm going to present here the Asian session live market analysis and the forecast for this particular week, 30th of November to 4th of December. So this is the last day of the month. 30th is the last day of the month of November. And then from tomorrow, you come across the beginning of the new month. So whenever you come across the month and the new month beginning fall in a single week, the market is known to make very volatile moves in order to handle the derivative market, the options and the futures. So we will look into that of the expected market moves for the sessions of the days of the week, Monday to Friday. And also, I'll try to do the market reading using the live market code page, find out what the players intend to do during this current time. And then I'll explain briefly about the trading strategy after explaining what sort of trades we could envisage for today. My contact details are given here. Those who are interested can contact me through email or through the Skype chat. So the trading system consists of three components, namely the derived forecast, the market reading, and the trading strategy, so that you find that consistently we are able to earn money from the market. So first of all, we will see the derived forecast for this week. Okay. This being end of November and early part of the month of December, the market is expected to undergo the yearly trend reversal. First of all, the monthly trend reversal from today till 4th of December, followed by that is the yearly trend reversal. So during such time, they are known to make very volatile moves in the market, especially whipsaw moves. So that might be very unheard of, or it will give enormous surprise to the traders. Even if somebody sneezes, the market will make about 150 to 200 pips rise or the drop. That sort of moves they are expected to do during this particular time frame. And so people might be of the opinion that after that of the Thanksgiving, the market volume might come down, and then later on we might come across very subdued moves. But this is not the case all the time. There are years wherein they have made very subdued moves during the month of December and also January. But there are many years wherein they made in thin volume condition a very aggressive moves in the market. So this time again, the aggressive move is expected to happen in the market because the players are doing the bottom fishing, holding low and trying to buy at the lowest level when the long holders are losing patience and liquidating the long positions. And also the analysts are giving long-term calls, the year-end calls, as that euro could go to parity and GBP could go to drop another 300 to 500 pips, and that sort of moves they are anticipating. So when people try to anticipate this sort of moves, the players pretend as if the market is going to behave like that and act against them. Only then they will be able to make money from that other market moves. So this gives a very clear picture that the players are accumulating the buy positions, holding low, and they are expected to, after handling the crosses, they are expected to handle the majors from that of next week. So this week, what are the moves they are expected to make? Today being 30th of November, they are expected to make the swing and slide moves during that of the Japanese session, and then from that of the European session, they are expected to make the swing and rise and swing and firm up. Then tomorrow, 1st of December, for the new month, they are expected to make a swing and rise, swing and firm up moves during Japanese and the European session, and then make some profit booking during the US session. That will give that impression to the traders that the market might come down again. So whenever there is a drop, immediately the traders will envisage parity in the case of euro. Whenever it pulls up, then immediately people will say that it could go to 1.10. That sort of extreme levels they see, failing to understand the intraday trades, what they can do. So ultimately, as traders, we can only do intraday trades. We cannot simply take a position and hold it for several days. So we need to envisage the profit as quickly as possible so that we can look into that of the another trade. So if you use the session-wise trades, the session-wise forecast, then you can do a sell and buy trade here and a buy and sell trade here, and that sort of things you can do it. Whenever you come across the rise, that means they will make the lower level swing and then rise. So you can buy near that of the low and then afterwards book profit during that of the rise. That sort of trades you can do session-wise trades, aiming for about 30-45 pips profit. So tomorrow again they are expected to make the firming up and then slide during that of the US session. Then day after tomorrow, that is 2nd of December, they are expected to make the swing and rise move during that of the Japanese and the US session, and European session they are expected to make the slide. Then again on 3rd, they are expected to make the either way moves, that is rise during Japanese and drop during European, and then rise again during US session. Then 4th of December, during that of the non-farm payroll, they are expected to make the slide during that of the non-farm payroll release. After that of the release, they are expected to make the swing and rise moves. Then you come across from next week onwards, that will be the month of December, the last month of the year. So similar to that of the monthly trend reversal, they do the quick moves during that of the last week of the month and the first week of the new month, or a month wherein both the, a week wherein the month gets over and the new month starts. They make volatile moves as a monthly trend reversal move. For the year, they invariably make very volatile moves during the month of December and also during the month of January. So envisage that they could suddenly make a very big moves in the market, and so trade with caution and also use the hedge order to limit the risk and choose the platform wherein they don't give the slippage. Now, with regard to the levels in which the currencies are expected to swing during this particular week, Euro is expected to swing from the 1.0575 to 1.0850 level, a nominal gain, and then from next week onwards, they are expected to gain big. And in the case of GBP, they are expected to consolidate around 1.50 level, start gaining it during that particular week. And in the case of yen, they could come down to 121 area and then start gaining it again. And in the case of USD CHF, they could do the higher level consolidation and then start making the slide to that of the low in this week. And from next week onwards, they are expected to gain the levels. And in the case of Canadian dollar, they are expected to make the swing near that of the high and start making the slide to create the USD bearish sentiment. And in the case of Australian dollar, they are expected to gain more levels from that of the low along with that of euro and GBP and go to 0.74 area. So these are all the ranges in which the currencies are expected to swing in this particular week. So keep in mind that the players are here to make money and not interested in showing extreme levels just like that. Unless and otherwise the volume picks up, they are not going to show some extreme levels. So keep in mind that if the volume is less, then it is good for trading and you will be able to trade easily. Swing trades, either way swing trades you can do using the hedging order. And in the event, if the volume increases and also in the event if the volume decreases drastically, then they can do some whips or moves in order to attract more volume. So keep in mind that the players have got the potency to make the whips or moves in order to earn as much as possible for the year end. And so their main objective is to make money from the other market. So for that, they will be making extreme moves. So carefully watch and trade. Now, with regard to the initial lows and the highs set for today, Euro formed the low 1.0571 and 1.0594 is the high. They are not breached the low or the high after forming it around that of 3:30 GMT. The case of GBP 1.5015 is the low, 1.5043 is the high. They are not breached the low or the high. Then USD and 122.72 is the initial low. They just breached and they are holding around 122.72. And as you see that Euro GBP as well as USDN are showing negative net change. So they wanted to make a small push on downside in the case of Euro and GBP along with that of USDN as a contrarian move to make a small dip. In the case of Euro Yen and GBP and afterwards they are expected to gain levels in the case of Euro and GBP. As a result, Euro Yen and GBP will gain more and they will be holding USD Yen at the time and slowly bring it down. That's what they already cut the low in the case of USDN and the high is not being breached, 122.85. And the case of CHF, 1.0296 is the low, 1.0314 is the high. They are not breached the low or the high. Slowly they are expected to breach the low and come down. And in the case of, and they might do a brief upward stop and start coming down. Then in the case of Canadian dollar, 1.3365 is the low, 1.3386 is the high. They are not breached the low or the high till now. And Australian dollar, 0.7170 is the low and 0.7194 is the high. They are not breached the low or the high. So in all you come across, excepting USDN, in all they are not breached the low or the high. So that indicates that this being the Asian session, they are trying to handle the yen and the yen crosses. Slowly they will come to that of the majors. Now to that of the recommended trades. So we'll keep a buy limit order in the case of Euro around 1.0572, just 1 pip above that of the low and 30 pips below that the hedge order to sell stop to limit the risk and 30 pips above a the exit or take profit order. So that way we can keep the setup aiming for 30 pips profit and in the event if it is hedged 30 pips, then we will try to close it with stop at entry or book profit on the downside in the event if they quickly make a drop during volatile moves. And if they gain levels, then quickly we'll close the sell stop and keep another sell stop 10-15 pips below and trail it up to the original level until the buy position makes profit. We will use the trailing hedge order, and once the position makes profit of 20-25 pips, we'll keep stop at entry and use the trailing stop in a profit making position and try to maximize the profit by moving away the exit order. As a result, you will find in the loss making position, as soon as the position is taken, it will be making loss. In the loss making position, we will use the hedge order, and in the profit making position, we will use the trailing stop. So this is the trading strategy we follow systematically. And during the early and the late sessions, we take positions in the majors. And during that of the mid sessions, we take positions in that of the crosses. So here again, in the case of GBP, closer to that of the low, we keep a buy limit order. And 30 pips below the hedge order to limit the risk. And 30 pips above, we'll keep the take profit order. So these are all the session timings. So early and the late sessions, we handle the players handle the majors. So we trade only in the majors during the early and the late session. So that is why in the forecast, when you see that swing and rise, so they will be making the lower level swing during the early part of the session and rise during the late part of the session. If it is swing and slide, then early part of the session they will be making a high level swing and then start making the slide. So when they are making high level swing, we can take a sell so that we will be able to book profit here. When they are making lower level swing and rise, then you can take a buy here and book profit during the late session. That way, if you try to do it, whenever they are making quick move during the session, early part of the session, if you take easily, will be able to book profit during the late session. But if you take position during that of the mid sessions, like now, it is 5 GMT. So then you find that they may make a dip up to that of the low and probably make a brief downward stop until if needed before making a firming up. Then in that process, we become panic. So whenever they are making subdued moves, don't enter into the market. Let them make the spread between the high and the lowest more than 40 pips. Then you select such currencies and try to take position so that you will be able to make definite profit during this session-wise trade. If you look into that of the market now, currently you find the euro is making about 4 pips negative net change. JBB is making 1 pip positive net change, and USD yen is making 8 pips negative net change. So you come across a contrarian moves. That is, euro is in negative net change, JBB is in positive net change. This is a contrarian move. Euro is making USD gaining move, JBB is making USD weakening move, and also USD yen is making USD weakening move. Then in the case of CHF, it is making USD gaining more by showing 15 pips positive net change, whereas GBP is showing 1 pip positive net change as the USD weakening move. So there again you come across a contrarian move, and you find that USD CAD and Australian dollar both are showing negative net change. Now it is unch, but earlier it was showing negative net change. So that shows also that they are making contrarian moves in order to handle the crosses. Then coming Friday, I got some assignments, so I'll not be able to present the next webinar. So I'll come on 7th of December, that is next Monday, and try to give the forecast for the next week. So meanwhile, if you've got questions, you can ask me. I'll be willing to answer those questions. Grace has got a question. In USD, going to continue its strength into this week? No, it is not expected. For the weekend, they may just, they made the drop in the case of Euro and GBP just to give the impression to the traders that USD could continue to gain. But afterwards, they are simply holding it. There is no panic drop as such. So the players create the market sentiment that way that USD is going to gain and gain. But that is the way they have to handle the market. Only then the traders get confused. If they make moves in such a way that technically Euro and GBP will go up, everybody will take the buy position. And as such, you come across that traders are taking buy positions in the case of Euro and GBP because they are at the lowest level for the season. And there will be bounce back, and then people are willing to take profit in the buy position. That's what the traders are doing now. And because they are trying to use their common sense to do that. But technically what the players will induce the analysts to say is that technically Euro and GBP look weak. So you better do sell and buy trade. And the traders will hesitate to start with. Then later on, when they find that sell and buy trade becomes so easy and we can make easily the profit, then they will start the sell and buy trade after the drop. Then once predominant of the traders going for a sell and buy trade, they find the players trapped. Then chat has got a question. USD CAD forecast. USD CAD is expected to make the downward move. So you'll come across high level swings around 1.134 area and then start making the slow slide. Any other question, please? I'm willing to answer these questions. Meanwhile, I'll show the forecast slide. So either you can take a screenshot or you can make a note of the session wise links. And this webinar is also being recorded and it is available in FX Street. In the home page, you come across the analysis and insight in the higher header menu, and you just click it. Below that, you come across the watch list. And once you click the watch list, you will find the recorded webinars of mine will be listed. Then you can listen to that. Either you can listen to that in FX Street or in YouTube and get the details from time to time. You might be wondering when the market is making the slide, why this man is telling that euro and GBP will gain, euro and GBP will gain, etc. But later on, you will understand that what appears in the market is not true. So keep in mind that the players are here to create the market sentiment and act against it of the traders. Day in and day out, they do the same, but still it gives enormous confusions to the other traders, because the one of the important aspects with regard to trading is the emotion. So when emotionally the traders are disturbed, then they think that what appears is true in the market, and then say that, okay, trend is your friend, and then try to take sell positions near the low or during pullbacks, and later on you find that in a few trades we will make small profit of 20-30 pips, but in one go, last go, they will trap us. So keep in mind that the players are here to trap. So whatever be the type of trade you do, sell and buy or a buy and sell, use a hedge order to limit the risk so that you will be able to act as a buyer as well as a seller in the volatile market. Alton has got a question. What about GBP? GBP is expected to gain the levels from the 1.50. They might do intraday a downward stop below that of 1.50 and brief downward stop and go to 1.4978 or so or 67. Then later on gain the levels quickly. So that could happen during the slide on tomorrow US session or day after tomorrow European session. Afterwards, they are not expected to slide. And for non-farm payroll, from the gained level, they are expected to slide. And after the non-farm payroll, they are expected to gain more levels. Stop-ins or buy opportunities. And use the hedge. In the event if it is hedged, then try to book profit if they make for the downward move, and keep another hedge order to limit the risk. And once they start gaining the level, you trail the hedge order upward until you are able to keep stop at entry, and then try to book profit on the buy side as well. So be a buy and sell trader as well as a sell and buy trader in the event if the position is hedged. If it is not hedged, quick straight away book profit in your buy position. Because the lowest level, the common sense says that you do buy and sell trade. But technically, it will appear that it's better to do sell and buy trade. This is the confusion, the confusing area. Many traders get confused, and later on, they become distressed traders. They do not know whether they can do in for a sell and buy, or a buy and sell, and later on, they finally become scalpers. They try to scalp for 2 pips, 3 pips, and things like that. And that again will try to make them distressed traders, because when they do the scalping, they don't use the stop or they don't use the hedge order. They only aim to quickly book about 4-5 pips profit. And suddenly when the players make a quick upward or a downward move, they become vulnerably trapped. And Then they go in for a damage control. In the process, they lose all what they have earned in scalping. So the entire exercise goes waste, and you only become impulsive. Your BP goes up. That's the end result, and you don't earn money from that other market. So ultimately, what is more important is you should be able to develop a strategy by which you should be able to trade at ease without straining you. The basic idea of making money is to enhance your lifestyle, enhance your comfort. But in the process, you should not become addicted to trading and start chasing the market without knowing why you are doing it. Without making money, you simply talk about the market all the time. You have been looking into the market and you feel sad, you become isolated, you just become preoccupied, you do not know why you are living in this world. That sort of situation should not happen, because that is not the uh, expected thing from you once you become a trader. Once you become a trader, people will envisage that you are able to earn some extra money in order to improve your lifestyle. And in that process, don't lose the shirt. So ultimately, what is more important is the emotion. The emotion governs your trading. So try to control your emotions and try to give importance to that of the common sense. And then you will find that you will not make such distressed trades. And also keep in mind always the market continues to give trading opportunities. If you're lost in one trade, doesn't matter. You give a break of 2 days and watch where exactly I have gone wrong, why I just booked a loss, whether it is out of emotions or because it is out of extreme moves in the market. So if you do that sort of analysis before committing another trade, you will find that you become an experienced, well experienced trader with a common sense. Otherwise, simply you lose in one trade and immediately think that no, I lost about 15 pips in that trade. I should earn at least 18 pips in another trade. If you try to go that sort of situation, if you try to think that way, then immediately what happens? You become impulsive, and that urge to earn money is triggering you to do more and more trade, and then it gives new ideas, like you commit more lots so that even if they make about 5-10 pips move, you'll be able to make big money. That is what the ideas will come, but you won't be knowing how much of risk you are taking in increasing the lot size. And in the event, if the market goes against, you find that account is closed because of want of margin. So never do that. Always try to take position for only 1% of the equity, and then try to see that you are able to book profit. Later on, going for another trade. In that case, even if you trade without a stop, you will be able to earn money. Even without the hedging, we will be able to earn money as far as Euro and GBP are concerned, because they will make the market volatile and you will be able to make profit. And only thing is, once the position makes profit, keep stop at entry and trail the stop, so that in the event, if the market again goes against you, you are not trapped again, because that sort of thing is very important in understanding the market. The players are here to make up and down moves in a market to confuse the traders. So when the European data comes, Euro and GBP might come down, telling that the European data is weak. And then when the US data also happens to be weak, they will rise Euro and GBP. And if you try to apply a logic that when US data is weak, why Euro and GBP go up? And what happened to that of the European data? And why Euro and GBP came down when the European data was less than expected, and afterwards they are going up? If you ask those questions, you will find that the players give all excuses, telling all excuses as if the economic condition is changing from second to second, like the swings in the market. But nothing happens of that nature, because you know that as far as interest rate is concerned, for the past 2 years, more than that, they are not even increased the interest rate. And every time they envisage that increase, and later on they say that it is there is no change, unchanged condition. But still they make the volatile moves in the market. When the economic condition is unchanged, why should there be volatile moves in the market? Then they will say that, no, no, we expected that way and that has not happened. That is why the volatile move. So for everything, you have an excuse. Suppose you have fallen on the road when you are walking without looking to the stone which was stumbling you. And you simply say that I was walking properly and the stone has come on my way. Can an inanimate stone can come on your way? No, not at all. It is a question of only perception. That way, the players make you to assume or perceive as if you are right and the market is going crazy. That is why many people say that the market is crazy whenever the market goes against their expectations. But whenever the market goes against your expectations, you should never become stunned. You should be in a position to use your common sense and find how exactly I should be able to earn money from such a situation. So if you apply your mind in a positive thinking, you'll be able to really make good money from that market. Instead, you become the victim of your emotions, then you find the market is trying to trap you and make you to lose all the money. So be a master over the of your emotions rather than becoming a slave to your emotions. So I'll come back on 7th of December and give the next week forecast and the analysis. I take this opportunity to thank FX Trade for the facilities provided to present the webinar, and also thank you for your kind presence and listening to the webinar. So I'll come back on Monday and give the forecast for the next week and see how exactly the market is trying to bring in the surprise, but we are able to envisage and read the surprises carefully without becoming victim of such act. Thank you one and all. See you on next Monday. Wish you all happy trading.